Greetings, everybody. This is Jeff Scott. Welcome to this week's review of the markets, top-down review. My email address is hgsidoc@gmail.com. I welcome comments either in the remarks below if you're watching this on YouTube, or email me. I try and respond to every email I get. If you're watching this, keep in mind that I record this in 4K with, I think, 125% magnification on my desktop. And what that means is if you're watching this in standard deviation, it sucks. So you want to watch it in the highest definition you can. I think I said standard deviation, but standard definition. There's a gear down the lower right-hand part. Just make sure you've got maximum resolution. If you don't have a good resolution, you can't see it, just download it from the link below. I entitled today, Gaps and Craps, Beware of Bull Traps. This was a tough week. Boy, it's been a tough several months, to be honest, as the market just chops away at our accounts. And I can tell you that I'm still profitable, but I had more profits a few months ago, probably like others as well. You know, I think about the market that we're living in, and we have these days where the futures trade up at night, and I still have a lot of shorts. So when I'm seeing the NASDAQ futures up over 100 points, it's not giving me the warm and fuzzies, to put it mildly. And then by the time the market hits 10:30, 11 Eastern, the market is all red. So gaps and craps are not what you see at the time of a bottom. Friday was an anomaly or the beginning of something new. This title is it's an anomaly, and as Kramer said after the market closed on Friday, the markets will forget about Friday by Tuesday. So it's very possible that we are in the beginning of something new and bad. I think there's plenty of evidence of that in the charts. So I think you got to beware if the market gaps again on Monday. Make sure it's real and it's not a gap and crap. Beware of bull traps. And I can tell you from several decades of experience, you could sit out the first couple of days of a new bull run and do just fine. And the other thing is, on the other side, if we get into a full bear market, you got to have cash left when it's done to participate in the next bull. So this would be the Jeffries cautious and bearish slide. I did this on Friday. By the time I got to today, I'm thinking, maybe I'm wrong. So there's an alternative title, the deja vu moment. Think back to November 8th and 9th of 2020. You could see here, whether you look at spiders, the Qs, diamonds, or the IWM, the market had turned down. It turned down, it turned down. And it started to look like it was putting in a bottom here. And then on Sunday, we heard that the government was going to approve and start using vaccines for COVID. Well, immediately, I think the market changed, and folks started thinking, we're all going back, we're leaving our houses. We don't have to worry about masks, we don't have to worry about anything else, that vaccinations were going to make all of COVID go away. Now, if I was a comedian, I'd say they'd make it feel like Florida, because that's what it's been in Florida most of the time. And what we saw was just the markets gapped and kept on running. So why would this be a deja vu moment? Because on Friday, Merck announced a new pill for COVID, and that if you have minor symptoms, it can statistically reduce your risk of hospitalization, ICU stay, and death. So imagine we have a pill you can go to your drugstore and get once it's approved, and it should be approved for emergency use very quickly, that your physician will be able to prescribe that can prevent COVID from getting worse. Well, if that's the case, does that mean it's time to rally? It's time to buy the dip and look for a return to normal trades? It was on Friday. If you think about Friday, what led? Energy and financials. What did I talk about last week on my buy list? A lot of energy and financials. That was before we had the pill. But this is interesting. If you look at the 3 weeks after this gap, starting with the gap update on the 9th, and you look at just the S&P sectors, all right, the S&P during that time, when 3 weeks was up a little bit, it was up 0.82. but energy was up 15.6, industrials 4.7, and then financial staples and discretionaries all above 2%. That's a big gain in a 3-week period of time, especially energy. So I think, although I still think this market's going lower and I'm still got a lot of shorts on, they're in technology, not in energy and financials. There is a chance that this is going to be a big deal, and it could be a buy the dip moment. Disclaimer, as always, is for education purposes only. I'm a doctor, not a broker. I'm independent. No one pays me anything in trading except for the money I make in my account. I paid for all the tools that I use. Trading involves risk. You and you are solely responsible for any investment decisions you make. This is just education. And if I talk about options, which I do from time to time, it is your responsibility to know what you're doing and to get educated. And I refer you to the Options Industry Council. I think options are a great way of trading, and if you know how to use them, can actually reduce your risk. But I can assure you from many years of hard knocks that until you really understand and know how to use them, they can really amplify your losses. You want to blow up accounts? Options is a great way of getting you there. Be your own guru. That's how I think we all should be. We need to learn from smart people. Many of the people I've learned from are here, and then you got to put it together in a way that works for you. I use a lot of different software. If you come to my house or when I'm not in the office, you'll see in my multiple monitors, one will have TradeStation, one will have Thinkorswim, some will have wealth charts, and then I'll have one that I'm doing HGSI, EdgeRater, and others. Within the main platforms, I've got John Person set, I've got Dr. K's tools, and I've got Sager's tools. And I use these every day. Now, I've mentioned wealth charts several times. I've also said you want to buy it during Wealth 365 week. I mean, Rob Hoffman has to be the hardest working person in this business because he stays on every night from, after the speakers are done for 3 or 4 hours. But typically he sells the whole thing for about $9.97 a year. And if you went on your own, I think it's $297 a month. Last thing I trump, $9.97 is a good deal. I'm never paid if you buy something. Anything that's offered to me, I tell them to give it to you as a discount. So I'm truly an unpaid volunteer, and this is just education. Again, no financial relationship, but for HGSI, the software, free 30-day trial, click here. They don't even ask for your credit cards, and under investing strategies, there's hundreds of movies. Stock patterns are cyclical. The stocks that we buy, canceling stocks, HGSI, high growth stocks, they go up like rockets, but they come down like rocks. So where are we in this market? It certainly felt Monday, Tuesday, Wednesday, Thursday that we're beginning this market of fear, the gaps and craps, the opening up high and closing low. Those are signs of a market to me those are bearish in a market that's rolling over. Now the question is, was this just an exaggerated move because we haven't pulled back this much that we've been seeing over the last year where we're going to rebound and go higher right away? We did on Friday. Friday was a massive day for my account. But I think we still have to gauge the risk is here. And like I said, you're not going to have to do it all in 1 or 2 days. And let the market declare itself before you lose more money. That's how I'm going to look at it. So I have cash. Now, what I've done is I still have some hedges in the market. I've got hedges on the spiders. I got hedges on the Qs. What led last week are small stocks. Small cap growth did okay. Small cap stocks did okay. Canceling small cap growth, not so good. FANG did kind of nothing. So I've raised cash. I got smaller positions. I've got collars on several of my long holdings. A collar to me is I bought a put at the money. I sold a call. They net out zero. If the stock goes down, I get to keep the difference if I sell my put, or I can sell the stock at the strike price. And if the stock goes up, I can either lose the stock and be put away or called away, or I can buy back the call at a loss. So the one thing that I can definitely avoid by doing that is big losses. So I'm trying to avoid big losses here. I like being up more than the markets, and I want it to stay that way. I said that the market was green or had a good day on Friday. It would have looked a lot different had I showed you Thursday. A sea of green on Friday, almost everywhere you look. I will call out especially financials, 95% were green. If we look at energy, which is somewhere in here, right here, everything was green. So it was a very, very strong market. Let's take a look at the major markets. Now, if you hear some whining here, it's my dog, and I've already given him so many treats, I can't, in my right mind, justify anymore, and he's begging. He knows when I do these things that I give in. So this is the S&P futures. I like looking at the futures because it eliminates a lot of the gaps, because they're trading pretty much all night long. And when you see a gap in the morning, it's really just showing you from yesterday's close to today's open. The first thing I want to point out is we hit the high here back in early September. We've been in a sell signal for some time. You could certainly draw a trend line down here and say we're clearly in a downtrend. We've got lower highs and lower lows. And, you look here, you had a retracement and a failure. And I'd expect the same thing here. I'd expect a day or two of strength and then fail again at this trend line. So we're in a downtrend. My target's probably the 200-day moving average, but I do recognize that we've got some lines, throughout the chart that could give you some support. But I'm looking at this. Was Friday it? And are we going higher and we reversed kind of where the low of the day here? That's possible. But I think we have to be open-minded and realize that any rally might be shorted. So this is a 17s cross below the 50, downtrend emerging on the E-mini futures. If we look at 1 year's worth of the NASDAQ futures daily, similar story. We sit our high here and have sold off since. And again, a rally, a breakdown, a rally, a breakdown. What do I expect to see next? A rally. But are we going to break down at the trend line, or are we going to break out and head to new highs? Certainly anything is possible. That's why I said be careful over the next couple of days. Gravity pulls you down, but it may be that Merck pill is going to cause us to defy gravity. Now, if we look at the Dow futures, this is kind of showing you exactly what part of the risk is you fail on the recovery and you go right back down and test. Now, we've tested the 200, so the natural thing to me is to try and take a run back up here at the 50. But, a fresh sell signal on the Dow. Does this look healthy to you? Does this look like you want to be all in? Not to me. Now, this one's different. This is the Russell, and the Russell remains in a sideways consolidation, as has been since February. If you're like me, you made most of your gains early in the year, and you've had some of them chopped away as the markets, especially the Russell, has just gone sideways in a Darvis box. So all of them are in-person sell signals. All of them have issues. I guess the strongest one's probably the Russell, because it's still above, and it broke above on Friday its moving averages. And I guess it's almost a power of 3 if you're a fan of Fred Richards. The VIX, you might expect the VIX to be up if the market is showing some turbulence and you get what you expect, where the VIX actually broke out, but then it reversed on Friday with a strong day. So we really haven't been able to have a sustainable move above the 200-day moving average. We closed right above it. So the VIX right now not giving me a big signal, although perhaps if I'm wondering whether it's the initial slide or the alternative scenario, the fact that the VIX has still moved up off of where it was might be suggesting the market is at risk here. And the dollar really rallied early in the week, and the sell-off in the rally was associated with, of course, a resurgence, especially in the small stocks. As we'll see on the weekly, the dollar is still way low in its pattern. Now, I'm not going to go through all the weekly charts, but I'm going to put them up here and just see if anything jumps out at me. We got plenty more times to look at this tonight. And you could see we've had massive runs. You could see we've had pullbacks into the 17-day weekly moving average, but this is one of the first times where one on the NASDAQ, on the S&P, the NASDAQ, the Dow, we've broken through it sideways on the VIX. And as I mentioned, you can certainly see, at least I can see, how much the dollar is off of its high. So big move up, but it's still way off. And one might expect this 200-day moving average, which was support several times on the way up, might turn into resistance. A falling dollar would probably be good for my stocks. What else can I show you? I can show you the expected move charts really quickly. Not as much excitement this week as I might have thought, although you can see the E-minis broke below on Thursday, and on Friday they came right back in, settling within the green and the red, meaning the person selling the at the money straddle made money, although close to even on the person that bought it. You would expect over 80% of the time the price to finish within those lines. So the S&P did move a little bit. If we look at the NASDAQ, this was the big one. Not only did it break through on Tuesday, the expected move, it kept on going. And these are, you're seeing topping tails, not bottoming tails. And this really looked like something bad was going to happen. And then, of course, on Thursday, we had a reversal day. But notice the reversal day really kind of closed similar to the close on Tuesday. We haven't taken out any of the highs of the day. So is this a dead cat bounce one day and we're going back down? It's possible. If I look at the Russell got back in and closed above the lower limit of the Dow of the expected move. If I go and look at the Russell closed almost where it opened the week, traded up on Monday, suckered a lot of people in like me, came back down on Tuesday, Wednesday, Thursday, and came back and almost to where it opened on Friday. And then if we look at the expected move on the VIX, again, if you're looking for a reason to be nervous, the VIX traded above and closed above its expected move on the week. And lastly, the dollar, whoops, my bad. Let me see if I didn't ruin this. The dollar, again, big strength and came back. So the dollar did escape. So it was a big moving week. I guess I'd highlight the dollar and perhaps the NASDAQ as the ones that really stand out to me. Now, a dollar breaking above, VIX breaking above, NASDAQ breaking below, these would all count to me as bearish type of signals. And then lastly, we can look at the, sorry about that again, the linear regression channels that I like, and just look at what signals they're giving us. Breakdown, retest, and fail. That's really, to me, is significant, and we go down. So down goes Frazier. For those that are old and remember the Ali versus Frazier fights. So that's kind of bothersome. Yes, we had a nice reversal day on Friday, but are we not in a downtrend? We got a lower low. We got lower highs. I think we have to prove, first get above the descending trend line here, and then ultimately we're going to have to break into the channel for me to be a believer. If I look at the Qs broke down, gap down, try to take them, failed. Do they look like they're going higher or lower here? Nice recovery on Friday. Again, there's a trend line here. They're going to have to break that before I'm a believer. If I look at the diamonds, again, broke out, retest and fail. I'd expect them to end up taking out this low. So I don't think this is necessarily done. Um, and then if I look at the Russell, you can see the Russell's just stuck in the same trading range. So again, is it scenario A, which is gap and crap and we got further to go? I put the majority of my votes there. Or is it scenario B, which is, hey, the COVID pill saves all. We're going to rock and roll. So I'm thinking it's A, but I'm not surprised we don't get a pop on Monday, Tuesday, and then go further lower, if I had to guess. But remember, I'm going to let the market tell me. I'm going to trade the market I get. I just want to be prepared. I just don't think it's over. Let's look at what's going on underneath. I wouldn't call it stabilized, Jeffrey. I'd probably say rates jump. So let me just change that because the rates jumped this week. And I think that's partly why we saw some weakness, especially in technology. So rates moved up quite a bit. Now the 30-year grew more than the 10 years. So I think that's called the steepening rate curve. Remember, rising rates are good for banks, especially regionals and insurers. And you'll see again that those were showing on mine. Now, when I look at the AD lines of the small stocks on the left and the big stocks on the right, you can't really see it, but there is both the IWM and the AD line turned up this week while large stocks continue going down. If you look at the NYSE, you can see this guy right here is unlike the others where it's actually starting to strengthen while the Dow, spiders, and Qs go down, and with rising rates, so does TLT. So just kind of looks like small stocks might be coming out first if they come out. If we look at breadth and we look at stocks above the 200, stocks above the 40-day SMA, really minimal change. If I look at 12-week new high, new lows, it ran up from here to here, no signal. When I get up here, I know the market's coming down, and when I get down here, I expect the market to go up. So it firmed a little bit, but not really giving a signal. Also, no signal on the McClellan oscillators. I look for extreme readings, we don't see them. Divergences, I don't see them. And zero line rejects. None of those are here, nor are they on the weekly. So we'll continue just to watch the McClellan. You want to talk about a market that tells you it could go either way? What about 50-50? Can't make this shit up, can you? When you look at the stocks in the S&P 1500, half were above their moving average. Half were above the midline of the Bollinger Bands and half are below, and you have very few above or below. So this is a signal of indecision. No evidence of a Hindenburg omen. You wouldn't expect one. Market tone. We had a couple kahunas on Friday with the market so strong. They flipped us out of a bearish red configuration in the Woody indicator, and now we're sort of a neutral yellow. If you look at the kinds of stocks that I trade and cancel them in general, what a lousy week. You could see here, earnings had nothing to do with price. This shows you the change in price, and this is from low to high earnings per share. Interestingly, the least bad performance was in the low relative strength rank stocks. The high relative strength. So relative strength was good. Earnings didn't seem to matter. If I look at the S&P 500, it's down minus 2%. You can see my buy watch and my holdings that I started the week with, which included a lot of hedges, were down about 2.5 to 3%. Now, my filtered buys, which is where I bought from, was actually positive on the week, 1.4%. And then the host of IBD related things, the Market Smith 250, the weekend review, the IBD 50 just got hammered. And that just gives you a sense that if you buy growth stocks, small cap growth stocks, like I do, like much of my portfolio, you took a little heat. Sectors, mixed. You got red, but you also got green here. energies, and financial. If we look at the last month, you could see that it's been a tough month with 3/4 of the sectors down, industry groups, and 65% of the stocks down. It is, when you see this pattern, and it's not the same stocks going up every day and the same ones going down, it's massive rotation. It's a tough market. You look at how strong Friday was. All sectors were up, yet between Thursday and Friday, only 2/3 were up because Thursday really was a tough day. So this is a yo-yo tough market, and you could see here, Thursday, 68% of the stocks were below the lower Bollinger, the midline of the Bollinger Band, and it shot back up to that 50-50 picture. For the week, 6 to 5 positive, but most of it came out of Friday when they were 11 to 0 positive. If we look at what sectors were leading, energy, materials, real estate. Now, keep in mind, when I look at the edge tools, they're looking at a broader market. They're looking at the S&P 1500, not the 500. So in the S&P 1500, it was energy, materials, and real estate, and what lagged, healthcare, staples, and utilities. Kind of what you would expect if we have a recurrence of what happened in November last year. You can see the top industry groups. I heard something that a German power plant ran out of coal, which sends the message of, and I'm not saying it's good or bad, whether greens are right or wrong, but you can be green, but better make sure you got a replacement before you stop making the coal to run the power plants. We'll talk more about some of the shortages. I like to look at stocks in the top groups, and then these are just some of the stocks that were undervalued. And for example, here's one, I think it's TSE, and it's what I like to see. I use fundamental and technicals, top-down view. I identified undervalued stocks, and I found one that it just bounced off the weekly trend line support. And the only thing I don't like is it had a reversal on Friday. But I do this during the day to find stocks that are moving in the right direction. And this is all thanks to Sager and Q. If we look at the canaries, they didn't do much this week, kind of sideways here. But notice they're still above all their moving averages, and they look much better than the NQs and the ESs, etc. Now, this is for the bullish camp. Let's not even worry about what you're looking at. The point is, I run this update every night, and I'm looking to find stocks that are at their low jump bar, meaning stretched to the downside, and then just have a simple green candle reversal. Well, one of the stocks that met that was spiders, which is kind of interesting, and derivations of the spiders. But what was amazing was the number of stocks that came up. So that either tells me, one, boy, this market is trash and these stocks will all be worse tomorrow. But the fact that I had all these reversals plays into scenario number two, which is, Jeffrey, be an optimist. We've got another November 9th and 10th moment. Buy the F and dip. And I'm still going to wait and see what the market does before I buy the dip. Know your news and earnings dates. Not much for earnings this week. But we got these non-farm payrolls on Friday. We got some jobless claims on Thursday. We got ADP on Wednesday. We got ISM services and PMI and market services on Tuesday. And factory orders. It's a busy week. Anytime you got, as John Person likes to call this, the monthly unenjoyment report, you got to be prepared. So, what my thoughts are. Selling momentum returned to the market this week amid a host of concerns, rates, valuations. As you can see, NASDAQ led the fall down 3.2, S&P 2.2, Dow 1.4, and the Russell, that should be 2,000, not 5,000. Oh my goodness. This is what happens when I rush to get it done for Saturday. Now, I've been doing this for free for 2 decades. Although I wasn't always weekly in the beginning. So I'm not going to be too upset that I had another mistake there. Friday was great with the Merck drug I mentioned, Russell leading up 1.69. Energy led the sectors this week. Coal shortages in Germany, China telling its oil industry to build supplies, fuel shortages in the UK. So that tells me oils and gas are going higher. And then I did on Monday buy some of the breakouts in cruise ships, airlines, hotels, and others. Um, I got stopped out of my cruise ship. The others actually flagged and then took off again on Friday. This is a hard market. I'm outperforming, but with this rapid rotation, growth versus value, COVID good, COVID bad, large cap, small cap, and industry group rotation, it's been tough. Like I said, I made most of my money in February, and the rest of the year has just been a tax as the market takes my money back. Um, I would have been better off just going to cash in April, March or April, but it's just not how I roll. Last week, I entered with substantial hedges in place. I sold some and entered some of the stocks we discussed last weekend: Spirit, Aerosystems, Fang, Pioneer, KRE, the ETF regional banks, TripAdvisor, and Alaska Air, CCL, but I got stopped out of. I still have put some of my larger holdings. I'm more net long than last weekend, put some of the cash to work. I'll be watching interest rates as they'll impact the market. There's some news late Friday that China is out of compliance with trade agreements and there might be some action taken that might spook the market. And, God bless Congress. They gave us a whole month reprieve. Um, I'm not going to get political, but this idea of suspending the debt ceiling to the end of 2022 is just scary. Imagine if I told you you could suspend your budget and just buy whatever you wanted and give whatever you wanted away. It's a scary thing because eventually you got to pay your bills. So this could be another heavy Washington news week. All right, let's go on to our top, the charts. For those that are new, I spend a lot of time looking at the market for a reason, and that reason's simple. I'm a top-down investor, and I know that 60 or 70% of what I'm going to see in my stocks this week is based upon what the market's going to do. So let's look at the E-minis and look at my 5 or 6 things that I like to look at. So first thing is we are in a sell signal on the daily and the weekly. We're still in a long-term buy on the monthly. A red bar down says don't be long. It's okay to be short or to hold. A blue bar says I'm neutral. You can hold, you can sell, you can go long. So we got a neutral color in a sell signal below the envelope. Gut says we'd probably go higher because markets like to live within the envelope. But look what we did on this move here. We moved up to the center, had a little bit of a topping tail, and we came right back down. And again, you could probably draw a trend line up here. What else do I see up here? I see that the weekly bongo, which is a intermediate trend line trending, is now in a downtrend. I look at this and again, do I think we can bounce this week? Absolutely. Do I think we're out of the woods? No. That's the S&P futures. Dow futures, same story. Nothing else to say. If I look at the Russell futures, it's different because it's gone sideways, but also in a sell. But notice with the strong week we had a buy on Friday rather. We're actually in a green bar here. We're still in a weekly and a monthly buy. So the Russell does look a little bit better. And lastly, the NASDAQ had a couple of Laguerre RSI buy signals, a little bottoming tail and a blue bar. Weekly, it's in a sell. Monthly, a buy. Weekly, it's got a blue bar. Looks to me like it's going to want to reverse and go higher. But again, would I expect it to go anything more? Notice in the uptrend, the pullbacks are to the midline. Okay? Well, in a downtrend, the pullbacks or the retracements are also to the midline, and then you go down further. You want to see the dollar. Let's look at the dollar. And you can see a couple of new things. The dollar is too extended. It looks to me like the dollar wants to come back, and you can see the dollar hit over 100 here on the high jump on 929. So you would have expected the dollar to pull back, and it did. These red dots here are saying, gee, here to here, much higher high, yet looking at the MACD, a much lower MACD histogram. So there's MACD divergence. So again, I would expect a pullback in the dollar, although it's still in a buy signal. And then the VIX, I don't know if the VIX, I have the VIX on this system. Look at the VXX. Hard to really do much with this. Yes, it's in a buy, but it's sort of been range bound. A break above here and a move would certainly be bothersome for the market. We just haven't seen it in a long time. If I go to major markets plus, including ETFs, look at the top-down view, I could see where the strength in the market was. Bitcoin on Friday, U.S. oil, small caps, commodities and transports, not exactly where my stuff lives. If I come down here, I see biotech, that's bad for me. ARC Innovation, that's had a week as well, IBD 50. So IBD, like growth stocks, did not do well. Neither did some of Kathy Wood's stuff. So I guess the question to me as I look here at the S&P 500, and I have to find where my tool thing is. I'll make this sort of thick and put this red. Somewhere in here, and I'm not the world's greatest artist, is this trend line. And until I break above that trend line, I am in a downtrend. And I expect it to retrace to this trend line this week. A really big move would get it up to that blue line, the 50-day moving average. But I still think we're going lower. Interestingly, that's nothing, never mind. This is the 200-day moving average. That would be probably my target. And if I had to pick a three-road scenario, and those who've been around know that that's something that Ian used to teach us, I think the bullish case is we take this, it's a November 8th moment, and we go to new highs. I think the bearish case is we go and we test the 200. And I think that the most likely thing we do, because it'll just chop up more of my money, is to basically move around in here before we break higher or lower. So that's my three-road scenario. This is the S&P 500. Does that look bullish to you? It does not look bullish to me. If I look at the Dow, it looks very similar. And again, if I was into trend lines, I could come in here and say, it's probably a trend line in here. And a break and close above it is great. If not, I expect it to come down and retest the 200-day as well. If I look at the Russell 2000, which has shown strength, but the Russell 2000, if you've been watching me, you know what I think about the Russell 2000. The Russell 2000 is basically, how am I going to do this? This thing's in the way, so let me give myself some more. Okay, yeah, that's not what I wanted. There is a method to my madness. So the Russell 2000 basically is sort of living, I don't want that either. Jeffrey, pay attention. Hit the box. The Russell 2000 has sort of been living in here. And right now we're just in the middle of the range, so it's hard for me to say much, except sell the top and buy the bottom. Do I think this is on its way to go higher? Sure. Not sure it's going to break out. So the Russell is different than the others. It's not facing a downtrend. And the NASDAQ, I don't think we've looked at that. But you'll see a similar pattern, which is kind of looks to me just like the others that we've got a downtrend here, lower highs, lower lows, stalling here at the 150-day moving average. Look, is it possible we're done going down and we're going to rally from here? Absolutely, yes. Do I think that's what's going to happen? No. And I look at this day right here, which was Tuesday. We had mobile breakdown. We had a person sell signal. We had phoenixes, and we have a kahuna to the downside. A lot of things that tell me this market is weak. Now, my favorite neighbor from Old Palm, where I used to live, sent me on Friday another Hindi. I do not see a Hindenburg forming here, and that I'm not sure if it means anything to me. However, I did see a weekly Hindenburg midweek, but it doesn't count to the end of the week. And I have experienced this over time. Sometimes you'll get a false signal, and when you get your final update in the morning, the false signal goes away. So I don't see a Hindenburg. Now, within the NASDAQ, the things that I like to buy, IBD 50 was breaking out, and it failed hard and is pulled down to the 50. It did have a touch all the way down to the 200. So if I wanted to be optimistic, you got a hammer, we could go higher here. I could be optimistic. You also have lower highs and lower lows. And like everything else, you're going to have to convince me that this is going higher. It could be. FANG has pulled down into the 200 where it's bounced in the past, and it looks like it might bounce here. And again, you got kind of a hammer. But at the same time, you got a person sell signal. All right. If I go, remember the FANG is different than the canaries because the canaries adds Tesla and a few other things. If I go and I look at biotech, you got a hammer at the 200. Is this a buying opportunity? You have to know what's in your ETF. And is this IBB? IBB's got a lot of Moderna. LABU has different things. But I'm sure they all got hit because Novavax, Moderna, BioNTech all took a hit this week. If I look at semiconductors, not as bad, sort of flattening here on that 150-day moving average, which is that blue dotted. If I go and I look at the dollar bull, you can see the dollar ran up to what's, I believe here is the 500-day moving average and reversed. But if I look at the weekly, does that look bullish or bearish? Still way off the highs. Rising dollars, probably bad for your account and my account. Unless, of course, your account is not does not have things that I have, like Mosaic and Starbulk carriers and other things that are probably going to be sensitive to the dollar. Here we have gold. Speaking of sensitive to the dollar, look at the resistance that gold's going to have to get through. It's got a 17-day. It's got a chandelier stop. It's got Wilder RSI up here. It's got a 50 and a 200. I think the dollar is going to have to drop hard for gold to wake up. Gold is in a downtrend, and you could see we've run into resistance and failed multiple times. So I'm not a big gold bug here. Eventually, gold's going to reverse, and maybe it's already started the reversal. I wanted to earn it some more. Silver doing nothing down here, and then gold miners. I never used to look at oil, but USO has actually done remarkably well and is breaking out here. So that's what I see from a top-down perspective on the markets. So 60% of what happens on Monday, 50 to 60 is what I just showed you. Maybe 20 to 30 is what industry groups. So if we look at the industry groups, I got 174 to work from. And I look at 2-day fours, how many are actively moving up? 68, 69. How many are going down? None. Just shows you how bullish Friday was. I rank them by this combo here. I got the strongest come up to the top, and then I right click on the one that's highlighted, left click change industry group, and those stocks that are performing better than the industry group come to the top, and that's where I like to buy from. So we looked at all these last week. I said Conoco was probably too far gone. It's even more far gone now. So maybe it would have been a good buy. Just watch the earnings per share growth versus the PE. Occidental, probably not too far gone. Here was that Monday gap up, then a flag, and then a breakout on Friday. Again, major earnings per share growth. Doesn't have a multiple because it's a turnaround stock that was losing money. This is the one I bought a lot of, Pioneer. Big move here off the moving averages, and then it just powered through the whole week. Here's that little flag, Tuesday, Wednesday, Thursday. Broke out to recent highs on Friday. It's been a lot higher in the past, but it's been a while. We don't need to go look at that. I don't think those are all-time highs. So I have a big position in Pioneer. Devon breaking out, EOG, and again, all of these have impressive earnings per share growth. Marathon, the other one I bought some was Diamondback, and you could see Fang is doing well. So we talked about energy stocks last week, and they worked well. Casinos. Now, I think these are a mixed bag. I mean, you had some numbers come out of Macau, where the concern there is probably how are the Chinese going to manage the process. So that will hurt Las Vegas and Wynn. But you've got the sports betting stocks that have tied up with the different casinos. One, Penn National, is probably more about sports betting. I've got a position there. And if I didn't, I might be looking to enter one on Monday, especially if it clears the chandelier stop. This is a stock that's been in a big downtrend, went up, came down like a rock, but it looks like it wants to go higher. You had a mobile breakout, a new person buy, a pocket pivot, and a kahuna on Friday. I own it already. I also own Boyd. Here's Caesars breaking out to what looks like new highs. MGM getting ready to break out to a new high. Here's Wynn, looks pretty ugly, as does Las Vegas. Again, these are different because they're China exposure. International gaming technology in a big run. The other one I have, which probably is below here, which I think looks a lot like Penn, maybe even better, is Boyd Gaming. So I've got two of these that I picked up early in the week. Now again, we gapped up on Monday, suckered us in. There's your bull trap. And then Tuesday, Wednesday, Thursday, we pulled back. But then with the good news from Merck on Friday, it made us look a whole lot better. If I look at entertainment facilities, again, something you expect to do well if and only if the COVID gets under control. AMC is a meme stock. You know, why this stock has a market cap of 19 billion is only because professionals are not the ones trading it. Live Nation broke out big time this week. Here was a time to buy it. Here was another time to buy it. Here, it's, you notice the mobile breakout from the squeeze and the pocket pivot and kahuna. Here's your flag. It's probably too far gone. Beautiful chart. Doesn't have the same earnings, but as we go back to venues, there'll be a big winner. Six Flags looks interesting. Pullback. I also like SeaWorld is another one that brings back a lot of fun memories from when I lived in San Antonio. Sort of a cup and a handle. Let's see if it breaks out from here. So again, expiration means we're back to work. We're driving our cars because COVID's going away. Casinos, we're out gambling because we can go into the casinos. We're going to entertainment centers. Biofuels has been up for a couple of weeks. I think it's been driven by this guy, Amyris. It's had a big move on decent volume. It's an interesting chart pattern. They actually have revenue. I don't know much about it. I don't like when it does the pattern it did on the weekly, but maybe it's time to start thinking about it, this nice saucer breaking out. I just want to make sure that this isn't one of these meme stocks, which it could be, and not that it's a big problem. So not much else there that I like. Everything else is below the index. All right, if we feel comfortable about COVID, we might start flying. Well, again, I saw signals last week, and what happened was Monday, gapped up, hit everybody's buy stops, and then Tuesday, Wednesday, Thursday, it fell, making us trapped, and then we got reprieve with a big move on Friday. So United still looks good. I liked American and Alaska. Delta looks nice, breaking above the 200. Here's American. And then the other one I bought was Alaska. And Alaska looks like it's going to break out here as well. Now, airlines are risky bets because all it takes is a worsening of COVID and a new variant. The next is application software. 5FIVN, 59, not the 5 below, but 59, the application software. It's interesting. Its relative strength has been improving as it's been going sideways, but it was a takeout candidate, and it gapped up some on Friday with a lot of upgrades when the Zoom takeout of 5.9, they decided to walk away because concerns over federal scrutiny. So 5.9 looks interesting. Zoom is too far down. I already have a position in Salesforce. This did nothing after its takeover or announced takeover of, was it Workday? Whatever it was. Um, and now it's breaking out and running. It's a great platform. Um, Earnings per share growth is tepid. We got a couple of gamings. These did not knock my socks off. But what you have is a combination of big volume, and if you had anything up, positive. Salesforce did not buy Workday. Maybe they did. I can't remember which one they bought. Maybe it is Workday. All right, back. Life science. Now, some of these got killed this week, and they got killed on Friday because if we're curing COVID, we don't need to be doing testing. And so many of these, like Fulgent, Quidel, and others, made tons of money this year because of COVID testing. So here's a big gap up on Biomerica, cheap stock, don't know the story, big demand, do your homework, make sure it's not a meme stock. $95 million shares, average volume is 2 million. Something happened news-wise. I don't feel like looking now. That was it in the group. 8 is internet-based services. This is what I do every night, folks. This is how I find the stocks that make me money. Uber, yeah, kind of looks interesting, but I'd rather wait and buy stocks that are above the 200. Booking and Expedia and TripAdvisor all had the same pattern. I bought TripAdvisor. I think all of them could have been good. And of course, what happened? It gapped up on Monday to get my money. And then Tuesday, Wednesday, and Thursday, it sold off, pissing me off. And then Friday, it made me whole plus more. Gap and crap. So I'm not sure how long. We'll have to see what it does. Friday made some of my trades that were ugly look pretty good. Just see if anything else looks decent here. I'm not a big fan of Uber or Lyft, but I'd rather buy Lyft, which has taken out its 200-day moving average. Number 9 is infrastructure software. Microsoft, which sold off a lot, kind of looks like the NASDAQ, and I guess the NASDAQ will follow Microsoft. If it can get back up above its moving averages, then I think the whole market will recover. MicroStrategy is a Bitcoin miner and purchaser. If Bitcoin rallies, MicroStrategy goes up. Oracle going sideways. ServiceNow, one that was great to buy in the past, but I can't, it's sitting on the 50, which is a good buy point, but I don't see any momentum here in a tough market. It's just an expensive stock. One that if you had bought it, imagine if you had bought ServiceNow, we've talked about it before, in March of this year, or March rather after the bottom of the market, you could have got in at less than 250. And here we are 18 months later, the stock's almost 700. Hard to buy it now, in my opinion, no pun intended. Palo Alto, internet security, sideways move. Mobile breakout from a squeeze, looks like it's ready to break out from a high base. Breakouts have not been working for me though. All right. Okay, that was infrastructure software, and then the 10th group is banks. These would be regional banks. And I told you last week you needed to buy some. You could see trade up on Monday. This is Signature, sideways Tuesday, Wednesday, Thursday, and a breakout on Friday. So we had Signature Bank, U.S. Bancorp pulled back. Truist was one that I looked at. KeyCorp. And again, I also said you don't have to buy an individual bank. You could always just buy KRE, which will look just like the banks here and pays a 2% dividend. and is very liquid. And that's how I played it. So I've gone through my top 10 industry groups. That's where I will fish in. Now, as part of today, this weekend's work, and every weekend, I looked at 1,000 stocks. I came up with some of my favorites, and then I combined my favorites with the high close dojis, and I looked at those and added to my favorites. And here is the list, and I'm going to go through it very quickly in 10 minutes or less, and then I'm going to be done. So I don't hand out this list. I don't vouch for this list. I'm just showing these are stocks that I looked at that I thought were interesting. What I really like to do is look at the industry groups and notice still a lot of regional banks, explorers, some of those gaming stocks still look good to me. Rising rates, which means insurance, falling dollar, marine shipping, some midstream, some PC insurers. Here we go, rapid fire, the stocks that I am putting on my watch list for Monday. All right, Criteo is I remember they got in trouble because Apple changed some of their algorithms and the stock had fallen. The stock is breaking out here and broke out above the 50, took out its chandelier stop, coming out of a squeeze, person buy signal, bunch of pocket pivots. Criteo, it's got revenue, not much in earnings. I would probably, well, I think it looks interesting right here. It's just going on a list. When I say list, let me show you what I mean by list. Oh, okay. Here is my buy watch list. Here are a bunch of indicators that I use to help me find things that I want. I will monitor this list and make decisions based upon this list. Or if you're a TradeStation person, you can use what's called radar screen. And you can list the different stocks and the different signals there, and you can monitor these signals during the day, looking for stocks that are making their move. Or you could find your favorite and put conditional orders if you trade above, in my case, a certain amount. I know my friend Kathy, she used to like them to trade down to amount to buy them, but if I'm buying stocks that are breaking out to go higher, I might never get it that way. So this is Criteo. Next one is Mosaic. I think we talked about it last week. This nice cup. Is this a handle and a breakout? I hope so, because I got a lot of this stock. I also have a lot of it because look at the earnings per share growth versus the multiple, pays a dinky dividend. Nutrien, another agricultural chemical stock, pullback and breaking out. This was on the list last week. We talked about it. Bunge, and the same thing, has not made much of a move yet. Howat Aerospace, don't know anything about them, just like the pattern. What do I like the pattern for? It's gone sideways. It's got run into its moving averages. It is right on top of its 50 and its 200, and it had a mobile breakout from a squeeze, a pocket pivot, and a kahuna. Despite the stock dropping, its relative strength in here has gotten stronger, and it has great earnings per share growth. This is Howat Aerospace. Here's Alaska Air, we already talked about. Here's American. Digital Turbines is one that I've had for quite some time, and then it sold off hard. And then, running up and failing, coming back, retesting the moving averages, ultimately broke out, then it retested positively. I think this one goes higher. I talked about 5 and 9. C, I don't get the fundamentals. I own the stock since about 35. Every time it pulls back to the 50, it runs again. It's at the 50. You don't buy it just because I said that, but it's one to put on a watch list. It also falls if the market falls. Bank United, now we're getting into some of the regional banks that are breaking out here. Fifth Third, Hope, PNC. Silvergate's a little different. They're in the internet space, if I remember correctly. Probably have one of the nicer looking of the bank charts. Already in an uptrend and broke out on Friday out of a squeeze. Person buy, recent pocket pivots and kahunas. This is one that was also on my list last week, I believe. Toronto Dominion looks good. US Bancorp. Western Alliance. Then I have a couple of specialty chemicals. This one doesn't look great. There's a reason why I liked it, and I can't remember. Oh, yeah, it's the earnings per share growth are pretty phenomenal, and pays a 4.5% dividend. Westlake Chemical, chart's a little bit better. It's broken above its resistance. Also great earnings per share growth. Here's Boyd Gaming. I mentioned to it, Caesars and Penn. I talked about the German electrical plant that ran out of coal. Coal's been super strong. This is Peabody. I do have a hard time buying coal, but look at the earnings per share growth. Look at how much demand the stock is in. Another financial is Capital One. Every Holdings, I wish it paid a dividend, but pullback, kind of a saucer, bit of a flag and a breakout here. Not my favorite. Both MasterCard and Visa have pulled back into into a base. And look at Visa here. Look at the improvement in person market catcher as it's been bouncing off the 200. Is it ready to go? I don't know, but it's a low risk buy here, that's for sure. The cruise lines, like I said, they popped up and then they traded back and they popped again on Friday. Mobile breakout, person buy, pocket pivot, kahuna. This is Norwegian. Big banks will benefit from the interest rates. Look at the earnings per share growth versus the multiple on Bank of America. Talked about Live Nation, talked about SeaWorld. If you're looking for a dividend, you might look at MLPs. With the firming of the energy patch, you might get both a rising stock price as well as a dividend, and this one broke out above its 200. Look at the industry group strength right here, and look at the relative strength of the stock versus the S&P. Talked about Diamondback. And then we have just a bunch. Here's Marathon, Hgsi, and Pioneer, which we looked at. One of my things that my business does is revenue cycle management. We do it for specialty care. R1 RCM is one of my competitors. I don't know anything about them except really steep pullback, and now it looks like they're making their way back up. Not yet. Arthur Gallagher is insurance broker, as is Brown and Brown. And Willis Tower, probably the best of the charts, but it's an expensive stock. Mobile breakout from a squeeze. A new person buy, a pocket pivot the day before, and a kahuna. Why are these things going to do well? Because these guys do well when interest rates go higher, and interest rates are going higher. And then Integrated Energy, Exxon, pays a 5.7% dividend. Auto Home, it looks better on TradeStation, I'll just put it that way. Golden Ocean, the marine shipping looks interesting. You hear about the delays, the premiums. It's good until they can't do that anymore. Here's GOGL, flag, gap down on Friday, and look what it did. It came back up and closed positive for the day on the weekly. Safe Bulkers breaking out here to a recent high. It's a cheap one. Star Bulk Carriers I have, very similar pattern, but a lot higher. I got into the stock down in this range. ET is an MLP. It's been in a downtrend, just broke above its moving averages. It pays a 6.3% dividend. And then you have OKE, 6.2% dividend, breaking out and running. Arbor Realty Trust and Mortgage Finance pays a 7% dividend, sideways move and breaking out. You can see the weekly, how much it's moved off the March bottom. Oil Services, I've got Halliburton. Champions is a cheaper one, Took out its chandelier on Friday, mobile breakout from a squeeze. Pocket person buy, pocket pivot kahuna, great earnings per share growth. Schlumberger, similar pattern, but I don't like the topping tail as much. W.R. Berkeley, another insurance provider. Look at this. You got the moving averages all converging. You got a mobile breakout from a squeeze. You're in a person buy and a kahuna. Small dividend. Then Paychex payment processing broke out, got above the 50. Robert Half staffing. I can tell you we're having trouble hiring in my company. And look what this stock does, how orderly it is. Sideways move, breakout. Run up, sideways move, breakout. We're in the sideways move, pulled into the 50. What does it always do from here? That's right, it breaks out. Gannett is a publisher. I've never really bought it. The two kahunas in a row, cheap stock. No dividend, mobile breakouts from a squeeze. I don't know too much about that one. And then here is a refiner, 2% dividend, Holly Frontier. You could see great earnings per share growth. And then Camping World, another stock that should benefit from improvement in COVID. Big sideways move. And what do we have here? Mobile breakout from a squeeze, and a person buy, pocket pivot, and a kahuna. Then you have a bunch of shopping center REITs, and I'm going to leave those at your own decision. Impressive moves off the bottom, whether you're looking at Site, whether you're looking at Simon Properties. This one is Regency. I think is it Kilroy or Kite is the same thing. I don't know the business well enough to say, except the stocks have done well. Sideways move here, looks like it might break out. And then if you really want a semiconductor that's cheap, this looked better in another platform. I'm going to talk about it. It doesn't look that good here. And Univar is another specialty chemistry play. Broke out, flag, looks like it wants to run higher. Good earnings per share growth. And then Neurokine Biosciences, something must have happened. A bunch of kahunas in a row, pocket pivots and a buy signal from John. Mobile breakout from a squeeze. What happened? I'd want to do some research on this one. And then one steel producer. Most of them are pulling back, but what's going on with TS breaking out here? Those are the stocks that look interesting to me on Saturday night. They go into my watch list. In TradeStation, I look at a lot more than that, and then I look for signals. Now, I'll probably pick one or two to play. I haven't picked them yet. Silvergate will probably be one, and the way that I'll play them is probably, the way I like to do things. If you've been here before, you probably know. It closed at 128.05. The high was 128.31. I probably would be looking to buy at 128.35, and I'd probably put my stop, gosh, right in this area here. Where's the 250 at? $109.40. So that's that's the problem. It's moved so much. Am I comfortable with that? Probably not. I'll probably look to put it at the bottom of this day, which would be about 116.50. I'm going to look at Silvergate, among others. What I'll do is I'll determine my buy point, what my stop is, whether I do stock or options, and how much I'm going to do. How much I'm going to do is really tied to how much risk I'm taking on the trade. That was one of my favorites, and I wish you a great week. Again, this market is interesting. I'm just going to close with where I started. When I look at these, I'm feeling kind of bearish. And I think we've got to break this trend line. We got to break the trend line. So the first thing we got to do to feel good is break the descending trend lines. The second thing we're going to do is we're going to have to break into the channel. I doubt that's going to happen on Monday. When both those things occur, I'm probably out of all my shorts and have headed long. But I probably am not going to do that until at least we take out the descending trend lines. I think this is a downtrend. I still think we're in a correction. I think it can go significantly lower from here. But as I said in the beginning, I also got to pay heed to what happened here and recognize the last time we had major COVID news, the markets broke out. So I wish I could be more succinct. I wish I could be more specific. But I think, as I said in the beginning, I think you can make the bull and the bear case. Just don't get trapped. Have a great week. Trade the market we get. We'll see you next week. And thank you.